Hi everyone, welcome to today's analysis of Bitcoin where we dig into where we're going to go leading into the FOMC meeting on Friday and Saturday at the end of this week. So, if we look at the chart as it's empty, we can see that we've got a little bit of a choppiness down. We've had 2 days up from Friday, Saturday, a sell-off on Sunday, which occurred at the end of the trading session, which we'll look at as we dive deeper into the 1 hour chart. And we have still a few layers of imbalances under here of liquidity levels that we can come down and mitigate. So while we do have this large wick, we do see that on a macro level, we are coming down, but on a greater macro level, we are coming up. So if we just zoom out, what I want to sort of pay attention, make a point of, is that we are in a constant state of both upwards trends and downwards trends. We're both going up, down, side to side. There's always truth in almost every case at every time. So in this level, we can see that from November 2002, we've had this uptrend going on from here as we've moved up into this current bull run. We can also see that we've got a slightly smaller macro trend where we've been bearish. Let's just pull up the chart. We can see that we've had a slightly smaller macro trend since May, 14th of May, where we've been coming down and consolidating, resting on a 50% level, which is a significant Fibonacci level, but we are rejecting off. But if we move down into the 1 hour layers, what we can also see is that we've got, from the 5th of August, we've still got a bullish trend, and then from the 9th of August, we now have a bearish trend. So on the greater macro, we've got a bull trend. On a slightly smaller macro level, we've got a bear trend. On a micro level, we've got a bull trend. And then on a slightly micro level on that, we've got a bear trend. So we're up, down, up, down, up, down. In a constant consolidation, a dance with liquidation. So, well, that sounded pretty classy, didn't it? Well, let's see if I can pull that off more often. So, what we've got here is we've got this bearish chart. So if we just delete that, we can see that in this micro bullish trend with a 2 standard deviation on a regressive trend channel, we can see that we are currently in a bullish layer. We're on the buy side of the liquidity. So what we're looking at doing is taking out liquidity, which wipes out short positions, which converts into closures, which adds more liquidity back to the market so prices can move higher. At the same time, just up here on the trend line, we met this liquidity here. We didn't mitigate as far as I thought we would. It was right on the tip, but on that very first liquidity level retest on an hourly basis, we touched it, we rejected, and now we've moved down into this buy side liquidity of this trend channel. Now, if I bring back this downtrend, what we can see here is that we were actually on the sell side of the liquidity, right at the point where the sell side liquidity and the trend line met in confluence with the hourly liquidity level, which is an absolute perfect space, and I missed it, but that's fine because that is trading. So what I can also see is that I still am in the sell side liquidity of this layer with the anticipation that it will come down into the buy side liquidity at some point, because there's always, for a trend line, if we have this trend line up here, draw it through here. Let's make it really dark. No, that's really dark. And let's make it a straight line. So if this is the trend line, and then on this side we've got 2 standard deviations from the mean. This side we have 2 standard deviations from a mean. Price will move up always regress back to the mean. And almost always stay within those 2 standard deviations. So that level is an average price magnet. Now it's not something that I like to play off, because I like to play off liquidity levels. However, it gives me a bias on which side I should be leaning. Should I be looking at buy side liquidity or sell side liquidity? Am I looking to, like for instance, with this one, I'm not looking to go so heavily short that I'm pricing up these price levels right now. I'm looking at, if I can move from this price we're currently at 58,500, if we can capture this price and we either capture 58,200, that's a small move. We could potentially capture 57,600, and on a super bearish case, I would target 57,094, so 57,100. So they're my kind of levels. I wouldn't want to swing for the fences at this point, at this stage of the liquidity level, because I am in larger micro buy side liquidity. I'm not looking at swinging for the fences and trying taking out these point of interest buy zones, because they're past the 2 standard deviations of this bullish trend line. So if this bullish trend line is to continue, then I am expecting price. So if I was to get rid of this one, and I was expecting price to be bullish in this respect, because I still think it will be bullish. However, I do feel it is going to come out of this standard deviation. So let's say price moves around. I'm still expecting it to come down and touch this at some point, but then be quite bullish. Maybe I'll end up being disproven with this regressive trend line. Maybe this is just a short-term trend, and that's okay, because within this range we are bullish. Let's go a little larger. Where are we? Let's just put it into a 4-hour, see if we can fit it on the chart. Alright, there we go. So then in this range, although we are bullish in this space on the way up, and then a slightly macro bearish, we are bearish from this point in March. From the 14th of March, we're still bearish. So we still have a chance that we can bounce around in this buy side liquidity. It's still here that can be taken. So with that being said, anything I take short right now, being in this macro buy side liquidity, is very short take profits. And any deeper movements into this buy side liquidity, I'm looking at slightly larger take profits. And then once I move into this sell side liquidity on the regressive trend line from the 14th of March, I'm looking at shorter take profits until we can start to move. And once we break past these levels, once we break past here, we are going to start producing a greater macro bull run trend line. So from there, that's what's going to give, for instance, this line more integrity, and that's where we'll be able to play with longer northward facing take profits. So let's just move down back into the hourly, and so why I'm giving a little bit of discretion towards my bearish bias. Let's just quickly tidy up. Reset the chart view. Great. So this was the bearish, this was the trend line that we were targeting from Friday. We ended up hitting both zones, so we swooshed through. We didn't quite hit this sell side liquidity at that point. We did hit it here a few hours later. Yep, 9 hours later, and now we've sold off. We could potentially come back in for a liquidity retest. We're already getting a liquidity retest rejection off this layer, which is very nice to see. So let's just tidy up the chart just quickly. Remove all those little biases that we've got and the little zones that we were positioning. As you can see, all these layers, all these liquidity wicks that are put through here, they all got crossed by an imbalanced candle, which means they are still all valid. They're now just liquidity retests. So they will all get retested. Ooh, that is not a daily retest. It is a hourly retest. And last one. Perfect. All right. That. Ooh, one more. There's a lot in there, which is interesting that just blew straight through. So that, I think, is going to be a level. There's a lot of levels through there, which is going to be a worth paying attention to as we come up. It'll probably give us a little bit of resistance as we move through there. That's okay, because we're aware of it, which means that we can actually play to it. Now, this area has been filled, liquidity wick filled, liquidity wick filled. Not interested. This one has been filled, and we can worry about this as we move to this as our imbalance. So my current bias now is that while we still have this range from the 9th of August, let's just draw it out again. So we use the regressive channel with a 2 standard deviation. We'll just stretch it down to current price with an extension. So now we are at a liquidity retest. We are at the standard deviation average. We are falling away. I'm looking at taking profits from a move from here down to the 58,200. So it's a very small move at 0.83%. Get out, but what I'm also looking at doing is buying in at the levels 57,650, 57,350, and I'll probably stop there. If we break this level, I will buy into this area of point of interest that I had further down here, but as the trend line has moved up, we have moved further away. But I'm looking at keeping it within that standard deviation. So I am looking at a price to move from here, hit target with a buy zone from here, but I'm also looking at a buy zone from here to move up. And then we'll see how things play out, because we are in that sell side on the macro from May. We are still we're on the buy side of that downtrend. We are on the buy side of this downtrend. We are on the buy side of this uptrend. So down here is starting to give us a lot more reason to be bullish. And just to give a little bit more confluence with this area here as to why I think we may be moving into a bearish context to give us good buying opportunity. Let's move over onto the S&P 500. Now what we've got here is we've got this bullish trend line progressive with the 2 standard deviations. We've tested this level today, and right now we are regressing, receding, removing. We've mitigated this level now on the hourly. We are starting to come back down. We have filled an imbalance, and now we will be looking at where we can go long from here. So on the S&P 500 chart, we've got three levels where we can come and mitigate, and they potentially all look like they are all going to be below in the buy side liquidity. So that means that this price has come up, mitigated, and now it's going to come back and either sell off a little bit for the day and move up, or we could come down and move a little higher. And then that's where we're going to look at, because we've been in this bull trend, so now we're looking at this space. So that is my bias for today. Thanks for tuning in, and we'll see you tomorrow and see how we go. All right, happy trading. Ciao.